Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and we've adjusted our show until we get back into the studio. I'm joined today by Scott Bauer. Welcome, Scott.
Hi there, Jeff.
Well, we got a lot going on, earnings season kicking off, but I want to really dive into two topics today, Scotty. I really want to talk about the earnings season. This is unprecedented. We've seen so much guidance, or the lack of guidance going into this earnings season. It seems like one of the most opportunistic earnings seasons we've had in decades. But also, I want to talk about our favorite precious metal, gold. Are you ready to get into these two topics?
Absolutely.
Well, let's look. We're seeing the banks this week. Obviously, the banks have been one of the second worst sector in the S&P 500. But what's your thought process? Because this earnings season, we just don't have the guidance. We can't rely upon that guidance. Maybe we could never rely upon the guidance. But what's your thought as we really kick off earnings season this week?
As you mentioned, Jeff, expectations are pretty low, and most or a good percentage of the S&P 500 companies have removed that guidance. So it's really, quite frankly, a crapshoot what we see here. But in terms of the banks, expectations extremely low, and I'm looking for some of the big banks to really give outstanding trading revenues, which may help prop them up.
Well, you bring up a great point. We talk about this dislocated rally. We put in the low in the EMEA S&P 500 on March 23rd, but we see some dispersion between the NASDAQ 100 and the EMEA S&P 500, nearly about 20%. So are you expecting more out of tech than the S&P 500 this earnings season?
I think that we would see tech continue to climb, but at some point, in my opinion, it's probably sooner rather than later, we're going to see that gap narrow. Like you said, it's about a 20% difference right now. History tells us it may not stay that way. And I think over the next few weeks through earnings season, we may see that consolidate.
Well, before we dive into earnings season here, Scott, I really want to talk about some exciting news out of the CME Group. There's a launch the evening of Sunday, August 30th for trade on Monday, August 31st, but these are the micro E-mini options. Talk about risk mitigation. Is this just another tool to put in the toolbox?
Absolutely. CME has done it again. And, pending all the regulatory reviews, like you said, Jeff, these micro E-mini options are going to launch on the micro E-mini S&P 500 and the NASDAQ 100 futures. Will give just another tool for traders and investors to help mitigate position risk or actually take on new positions.
Oh, that's fantastic. Well, let's transition into gold. I really want to get into gold here, Scotty. It's interesting to see. If you're interested in gold, there's actually a great webinar coming up. Don't miss the CME webinar, Gold Futures and Options, Opportunities for Active Traders on Thursday, July 16th at 12 p.m., 12 to 1 Central Standard Time. But let's talk about how gold dipped back under $1,800, Scott.
It did, Jeff, but there certainly seems to be some tailwinds here, and at least recently the charts look like it's a buy the dip at any time, and I really see gold hanging in there at least through November in the elections.
All right, so gold is not broken from a chart perspective. You're just seeing a potential better entry lower.
No doubt about it.
All right, well, Scotty, thank you as always. We also want to thank you for tuning in to Striking Options. Please tune in every week as we will continue to strike options.